So we just witnessed a massive rally for Tesla stock right after this surprising earnings report, but I wanted to touch on a few things regarding Tesla and share my thoughts post earnings. Now, real quick, just a friendly reminder that I do have exposure to Tesla stock in my long-term portfolio, but unlike a lot of the Tesla zealots who worship Elon Musk and would probably follow Elon Musk into a volcano if he promised they'd come out battery powered, I try to keep my analysis objective. Now, of course, this video is for informational and educational purposes only, and you should only trade or invest in what you see value in. So off the rip, this was an interesting report, and we did see the market buying into Tesla with total gross margins increasing to 19.84%, which is mainly what Wall Street was looking for. But Tesla did miss on revenue, which was expected. But what was unexpected was the beat on earnings per share, mainly due to improvements in cost management. But we saw total operating expenses decrease significantly, dropping from $2.93 billion in Q2 2024 to $2.28 billion in Q3 2024.
This is great!
Now, this is important because lowering operating expenses, especially in areas like selling, general, and administrative costs, boosts operating income. So, when a company can reduce costs without sacrificing too much in revenue, it directly enhances profitability. So this is one of the key reasons Tesla surprised the market this quarter. So to be honest, I was quite surprised as well, but let's look at revenue growth in more detail. Now, Tesla's total revenue only grew 8% year over year, while automotive revenue, which makes up about 80% of the company's total, grew by a modest 2%. And that's like a bodybuilder bragging about gaining mass, but it's all in their arms. And they still skip leg day every week. Sure, the upper body looks impressive, but those legs, they're holding on for dear life. But in seriousness, this is important because while Tesla is often viewed as a high-growth tech company, seeing this slower revenue growth suggests that competition and market saturation could be impacting Tesla's momentum. But now, we should also note that Tesla's gross margin in the automotive segment has fallen compared to previous quarters, which could indicate increased pressure from other electric vehicle EV manufacturers. And that is a bit concerning because the competition isn't just knocking, they're busting through the door like they're crossing the border at full speed, waving papers in the air, yelling, "We're here and we're not leaving," and Tesla's just sitting there like, "Wait, this was my house." Now, Tesla is also facing some challenges in market share. Although their EV market share in the US remains strong, it has largely plateaued. And in markets like Europe and China, the competition is even stiffer. In China, especially, domestic manufacturers are ramping up EV production, which could pose a significant long-term threat to Tesla's dominance in that region. But despite the slower growth in its core automotive business, Tesla continues to invest heavily in future technologies, including AI and full self-driving FSD capabilities. However, the FSD narrative remains somewhat controversial, and I think that's probably the nicest way to put it, given the nearly decade-long series of empty promises. At this point, it's starting to feel like when your dad said he was going to the store to get milk, and well, here we are still waiting for him to come home. You know, it's probably not happening, but part of you still holds out hope, right? But again, in all seriousness, with automotive revenue making up the bulk of its business, how Tesla navigates the increasing competition in the EV market will be critical for its long-term success. And if we see cheaper future models introduced, I have to say I'm still somewhat concerned about future revenues in the automotive space. But now, moving on to a question I get all the time, which is, if you think this stock could be worth $800 in 10 years, then why worry about today's price? If I'm buying it at $230 today, isn't that a bargain? And I completely get why people think that way, but they are missing another part of the equation. See, the thing is, even if a stock has massive potential, you can still overpay today. Why? Because the future isn't guaranteed. But now let's break this down. Imagine this stock is trading at $230 and your model suggests it could reach $800 in a decade. Sounds great, right? But here's the catch. You know, that future value is built on a lot of assumptions that could change drastically. Let's say your prediction relies on Tesla achieving full autonomy and leading a transportation revolution. But what if something happens to Elon Musk? What if he dies in a jet crash and his successor decides to scrap the idea of full autonomy? Suddenly, that $800 target looks a lot less realistic. And it's not just company specific factors, macro factors like economic policy or global events can shift markets, changing the landscape for every company. Regulations could tighten, creating new costs, making growth more expensive. So, a lot can shift between now and 10 years from now, impacting what a stock might actually be worth. This is why it's essential to constantly reevaluate. Setting a future target and forgetting about it means ignoring the risks and changes that come along the way. So now, checking in regularly, seeing if the company is still on track, if the industry is stable, if your assumptions still hold up, helps you ensure that you're not just hoping for future gains, but making an investment based on updated information. So, yes, it's great to have a vision for what a stock could be worth someday, but paying too much today based on future hope alone is risky. Real investing is about balancing the potential of what could happen down the road with the actual realities of today. And so tools like a DCF model help make sure we're paying the right price, not just for where we hope a stock will go, but for where it is right now, which means essentially that it very well is indeed possible to overpay now, even if current models predict 800 in a decade for a stock. But now, of course, with that said, I wanted to go ahead and hop into the charts so I could go ahead and provide a visual perspective on why I'm not too excited for Tesla. And no, I'm not a Tesla bear. As I mentioned in the beginning of this video, I have shares in Tesla and I've been holding shares in Tesla for a few years now, right? So it's not someone who's bearish on Tesla. But one of the things I mentioned was that around this area over here before this earnings, I believe that Tesla was overvalued based on my financial model. And although Tesla did have a surprise in its earnings and it popped off, I still believe even more that Tesla stock is overvalued. And I know a lot of people got excited, a lot of people are adding in, and I just want to go ahead and just provide my perspective. Again, this is not a buy or sell recommendation, just me sharing my views on Tesla. I know sometimes when I kind of share this kind of pessimistic view on Tesla, I get a lot of hate, right? There's a lot of tomatoes thrown at me, but I wanted to go ahead and touch on something. First off, let's just provide a quick reminder that year to date, Tesla's only up 5%. So after this big move, Tesla's only up 5%, right? Let's just keep that in mind versus the S&P 500, just the broad index is up almost 23%. And so, yeah, we had a nice big move, but again, it's underperforming the market by a significant amount. And I know people will say, well, Tesla has this price target in the future of 800. Well, again, as I shared, even if you have a price target for a stock in the future, the time value is what you have to consider because the future is not guaranteed and there's a lot of assumptions. We have to believe that FSD is going to be solved. And if you're not a strong believer of that it's, possible to happen, well, that could completely change the price target. Now, do I believe it could happen? I think in the future. But at this moment, I still think there's a lot of regulatory challenges that are going to stifle Tesla. And so that's why, even though Tesla stock is moving up, I've been buying in a lot of other positions. And not to really brag, but some of the positions I shared publicly on YouTube were like the trade ideas I shared with NVIDIA. I shared, and again, there's these videos, I don't delete them. They're still here on YouTube. I shared the breakout idea for NVIDIA stock within the Push and Profit private group and then talked about it afterwards on YouTube in the beginning of this year, actually back in December. And look at where NVIDIA is, 187% year to date, right? I added that into my long-term position back in December. Let's take a look at another trade idea I shared with the private group a while ago. Spotify, I mean, look at this. Let's just take it from the beginning of the year, right? Somewhere around there, right? To now, over 102%. And then gold, which I don't have the position still. I actually sold out of gold back in the beginning of the year, but I traded gold in the beginning of this year, And we actually, had a really nice move up with gold that did 20%. Now, I didn't catch the remainder of gold in the long-term portfolio. I actually rotated out over here and actually added into some other positions. But the moral of the story is that I'm not really, I know I saw comments of people saying, Justin, I bet you feel very sorry now that you didn't buy Tesla over here because you believe it's overvalued and now Tesla stock is up. Look, remember, I still hold shares in Tesla, so obviously it going up, I'm still winning. But the capital that I add into my portfolio, the shares that I'm actually buying, are companies that are actually making new all-time highs versus, I mean, let's take a look at Tesla, right? Tesla, the last time it made new all-time highs, what year is this? I mean, this is 2021. So I'm actually not really losing much if I still have shares that are just sitting here idle, and I'm putting my money to use and using that capital in a lot of other names. And one of the things I also get is often individuals saying, but Justin, Tesla soon is going to have that same move that we saw in 2020. And I think what a lot of individuals don't understand is what actually changed in the fundamentals between 2019 to 2021 that caused Tesla to move up, and also a lot of the macro perspectives that kind of bled in. I mean, we have to understand the economy was just flushed with money and the entire market just moved up. So something that became profitable like Tesla had an extreme rally. And now, again, I'm not saying I'm never going to buy into Tesla, right? It's not that. I just currently think that Tesla is a bit overvalued in my current models. And of course, models can change. Maybe we could have something updated with Tesla, preferably something with Optimus having a significant increase or improvement that may make me reevaluate my model. But again, I'm at the current time, I'm not factoring in Optimus. It's hard to factor that into a model right now, and I'm not too really enthusiastic. Well, I guess that's the wrong word. I'm just not a strong believer really in FSD currently. And I know people say, oh, but Elon Musk said it's happening next year. Guys, Elon Musk has said this was going to happen for, what is it, a decade now of him saying that it's going to be solved. And I know each year we get closer to it being the next year. But realistically, and this is really weird to me, that when I talk about my analysis of the markets, both technically, fundamentally, also, embedding like a macro perspective, anytime I say anything that may not be uber bullish on Tesla, I feel like I get crucified. But it's weird because I don't mind getting crucified of not being too bullish on Tesla when my portfolio is doing stuff like this, right? I mean, what really matters? Is it being in a cult stock or actually seeing your capital grow and seeing, compound interest take place where you see, dividends come in and reinvesting it from, your dividend stocks into other stocks? I mean, what really matters in the world of investing? Is it not, making money and actually, making sound decisions? Again, just a friendly reminder, the index is up over 23%. Well, Tesla is up just shy under 6%. And again, hopefully Tesla can keep going up. I just personally see and feel that, in my model, that's a bit overvalued, but that's just my perspective. Again, I don't want to sway anyone away from what their beliefs are or what they see in the markets. Whatever you see value in, that's what you do with your money, right? So I just wanted to, provide an update on Tesla. I know I've been kind of away for a bit. By the way, just a friendly reminder as well, make sure to hit that subscribe button if you haven't done so already. Also hit that like button. It really does help out with the channel. But in the comment section down below, you guys let me know what's your thoughts on Tesla. I don't put too much of a big weight on technical analysis, but we do see there's a little bit of a resistance over here. But again, I technical analysis, I put very little weight on it in comparison to the fundamentals. But you guys let me know, are we going to see Tesla stock hit 300 by the end of the year? Like some of the Uber Tesla bulls believe. Actually, they believe 350 by the end of the year. Not too sure about that, but you guys let me know in the comment section down below, and perhaps let me know what other names that you're looking at, because sometimes I see, you know, companies that I wasn't actually looking at, and after I do a little bit of my own analysis, I'm like, wow, that's a great company. We had someone in the Push and Profit private group mention how they are absolutely killing it with this company right over here. Was it this company? Maybe I might have I got to double check, but you know, sometimes I find, yeah, it was. Sometimes I find great you know, ideas just based off what you guys share, and I'm very interested. So let me know in the comment section down below. And with that said, hopefully you guys have a great rest of your day, and I'll see you guys on this next video right over here. Take care, guys.